Phil, we've had a busy week on the earnings front, also a busy week on the economic front with the PCE data today, GDP yesterday. Tie it all up in a bow for you. What did you see coming out of some of this economic data?
Yeah, I think it reemphasizes that fundamentals remain in place. If you look at GDP data yesterday, truth is the underlying results, final sales looked a lot better than the headline. We've had good retail sales data, good payroll data. Initial jobless claims are still low. And earnings, 80% of companies are outperforming earnings expectations. There's been some volatility around guidance. The truth is it's been a pretty good earnings season. So we think fundamentals remain in place. Yes, inflation's running hot. We do think the Fed is on hold for now, as most others do as well. But fundamentals remain in place, and we remain pretty optimistic from a market perspective.
I guess inflation is probably for a lot of investors kind of job one here. Where are we in terms of fighting inflation here? Is this a momentary pause in the decline in inflation, or maybe something more fundamentally challenging?
I think this is a reminder we're in the last mile. It's a lot easier to get from 9 to 3% inflation than 3 to 2. We're seeing sort of a sideways move, and I think it's going to be really difficult to get all the way down to the Fed's target of 2%. And it might be that the economy and markets look through that higher inflation running in the 2 to 3% instead of 2 flat is okay for the economy. It does appear maybe we are not as interest rate sensitive as we have been in past cycles. Look at what the stock market has done just since last October. And we've had a drawdown. Were we down less than 4%? The truth is pretty resilient. Inflation elevated, but maybe not so elevated that gets in the way of company fundamentals.
So I guess that kind of brings you to the question here. Is there an argument that the Fed maybe could put a rate hike out there and really surprise the market? Or is sitting on the sidelines probably the preferred strategy for the Fed? How do you think they'll go?
Our base case and our preferred strategy is sitting on the sidelines, right? We do have a positive real rate that should be restrictive for the economy. Yeah. But I wouldn't put it at 0% probability that the Fed hikes, right? There is potential. It's only April. If inflation data were to reaccelerate, I think that's going to become more of a discussion, but certainly not our base case.
Phil, with your equity securities analysis history with Wells Fargo and with Morgan Stanley, does this new higher real rate, 2.25%, let me get that exactly, 2.24%, does it impinge business? Does it change how corporations behave?
I really don't think it does. I mean, the exception to the rule historically, as you're well aware, Tom, is post-Great Financial Crisis, right? Extremely low rates, money is free. We've really seen a return to normality. Company margins are expected to start to expand. I think we have a dynamic economy. Companies are more agile than we give them credit. And they're adjusting to the idea of higher rates that really aren't that high versus long-term history. I'm not sure it's that restrictive. Look at the Bloomberg Financial Conditions Index. Pretty loose financial conditions out there. I think companies are adjusting.